Stock of the day, and I forgot we had Perpetual a bit later this half hour, but stock of the day, I thought we'd take a look at Pendal. Market volatility and nervous investor sentiment continues to hit Pendal's funds under management during the September quarter as the $2.5 billion takeover talks by Perpetual continue. Pendal's funds under management for September quarter fell to $104.5 billion. That's slightly down from $111 billion at the end of June. Let's see what the experts think of Pendal and maybe the broader landscape. I noticed Zenith has placed some of Magellan's funds under review. Andrew, what do you think of the Pendal result today and its share price at the moment, and maybe a comment on the wider sector of the fund management group?
Sure, Koshy. I'll talk to Pendal, but I don't want to talk too much about fund managers simply because we're going to tease people, Koshy. We're going to ask them to dial into the drop tomorrow, where I'll be talking in depth about that. But I can give you some high-level thoughts, certainly relating to Pendal.
Oh, you are a tease, aren't you? Who cares about the drop tomorrow? This is the call today.
I know, Koshy, but I'm just trying to build up your numbers. I'm just trying to get that continuity. They're obviously listening to you and I and Mike today, but we're just trying to, just tease it out a bit. Anyway, so I guess no great surprise with that Pendal result, because we're seeing that across a number of fund managers, seeing plenty of volatility in markets. We're seeing outflows continuing, albeit that the scale or the scope of those outflows are abating. Obviously, all the macro stuff that's going on, high interest rates, inflation, geopolitical concerns, you name it, we've got it going on at the moment. So no great surprise there. And in fact, if we look at broader fund managers, if we go back to beginning of 2021, the average PE of a fund manager was 16 times earnings. Today, we're back at 8.
Wow.
So we've seen a big de-rating in fund managers because of all the things I just spoke about. And there's still some headwinds about. I don't think this is going to turn around anytime soon. However, I think from a Pendal point of view, their potential get out of jail is this takeover from Perpetual. So again, we won't go too much more into that because we're going to talk about Perpetual soon. And I think from a broader macro point of view, those outflows should start abating soon. So I think fund managers in general, I'm feeling a bit more positive on. We've seen that big de-rating. But in the context of Pendal, we probably need to get a bit of a read as to whether that Perpetual takeover is going to be finally sorted out or not. So it's a hold.
Okay. Michael?
There's obviously the current risks that Andrew mentioned in terms of poor market, outflows, etc. I guess the big question is, well, if you think that we're getting towards the end of the tunnel with this bear market and all the issues that we have, and then the market might have a good year next year, can Pendal capture that upside?
Yep.
I think the likelihood of that happening would have to be low, given that over the last several years, they just haven't performed. In terms of the share price, it peaked in 2015. A lot of these fund managers just have not performed well enough.
Even during booms.
Right. And I think it's a big call to assume that they can get it right when they've got it wrong for the last several years.
Right.
And coming back to the point about Magellan, 2 years ago, Magellan was the bee's knees of fund managers, could do no wrong. We've seen how that's unravelled in the last 2 years. So which fund manager can we be confident enough to actually do a good job? I think one of the problems with these fund managers is that they're just not managing the downside risks so well. So where you've had markets that have done really well, they haven't necessarily captured that upside, but then as markets became difficult, because they're just so big, they just don't have the liquidity to be able to defend themselves. And the problem is, if you look at some basic maths, if you've got a fund manager that can return, say, 9% a year, and you compound that for 5 years, then when you have 1 year where the market's down, let's say they lose 35%, and that's not unreasonable. The S&P 500's down about 22 to 25. If it drops another 10, there's your 35. You erase 5 years worth of gains. So I think the big problem is they just can't move quick enough, and that's just a symptom of just very large fund managers.
Isn't that interesting? It's a really good point, because often the best performing funds have been little boutique ones who have got a niche and are building their business.
Yep.
You know, Platinum was a classic case. You know, it was the rock star before Magellan, but then just got too big as well.
That's right, and I think the smart fund managers, so you know, I'm not painting them all with the same brush, you'll see the smart guys who come to market with a new fund put a cap on how much they want to raise, because obviously what I can do can't be done by Magellan, but if there's some sort of middle ground where you have the nimbleness, but that sort of funds under management clout, then you can actually still do well.
Okay, so a no on Pendle for you?
It's a no.
Okay.